Good afternoon, everybody. I am Isabel Galdiz, Vice President of the International Relations Division, Office of Policy at the Export-Import Bank, and I'm very happy to welcome you to the Whole of Government Synergy panel, where we will explore how two U.S. government agencies work together to support U.S. companies pursuing opportunities abroad. I'm happy to be here today to complement the supporting U.S. government initiatives through interagency collaboration panel, where our chairman, Jim Burrows, hosted acting CEO of MCC, acting director of TDA, and the acting COO of our partner agency on this panel, DFC, Dave Marchick, in a discussion related to how those agencies are coming together to support the Biden-Harris agenda. Today, this panel will explore in detail how we can come together at the transaction level. And I'm pleased to be joined by two leading experts in infrastructure finance. To introduce themselves now, I'll first turn it over to DFC.
Thank you very much, Isabel, and excited to be here today. Hi, everybody. I'm John Onwallo, Managing Director within the Office of Equity Investments here at the DFC. I'll tell you a little bit more about what we're focused on and excited to tell you more about DFC. I'll pass it over to my colleague Dan at EXIM to introduce himself as well.
Thanks, John. My name is Dan Tobin, Managing Director of the Power Group within the Structured and Project Finance Division here at EXIM. We have three different groups within EXIM, and I within the Structure and Project Finance Group, and I head up the Power Division. Pass it back to you, Isabel.
Thanks, Dan. Thanks, John. Thank you both for joining this panel. As reported each year in the annual competitiveness report to Congress that EXIM produces, many foreign governments have begun aligning their support instruments in favor of more effective one-stop shop financing solutions to provide their companies. So the US is now looking to do the same, and we hope that these discussions during the annual conference can bring to you, the audience, information to help you achieve your financing goals through this interagency collaboration. We've heard from you. You've approached us to ask, why can't EXIM work together with DFC on transactions? Why can't EXIM partner with DFC as our foreign counterparts? Other export credit agencies can partner with their own development finance institutions. We are hoping that now that we've started this discussion at the staff level and that we are building together a roadmap between EXIM Bank and DFC, that we will be able to, over time, provide that effective financing solution menu that you and others have come to find from other governments. We hope that we can work together with our private sector partners and bring them into this discussion as well. So together we can achieve the outcomes that we all hope to achieve, which is supporting the Biden-Harris goals, but also serving you, the US companies, with state-of-the-art financing options. We think for that we need to be flexible, and we need to look at more attractive and easier ways for you, the US stakeholders, to be able to engage with us, the financing agencies. And so with that in mind, we have invited DFC to this panel at the EXIM conference so that DFC can now provide a look into its agency to all of you here familiar with EXIM Bank. And then John will dive into his area of expertise so that we can look at one concrete way in which our agencies can work together. We think that this practical discussion will be able to show how we can jointly work together and leverage each other's capabilities to better respond to an increasingly competitive marketplace, as well as the financing imperatives that we have, including the climate challenges that we are all keen to support. So, with that, I would like to turn it over to John so that he can introduce DFC to you. John, over to you.
Thank you very much, Isabel. I'll just share my screen here really quickly to tell you a little bit more about what the U.S. International Development Finance Corporation is and what our priorities and focus are. As some of you may know, DFC recently became into existence following the passage of the BUILD Act. We are the U.S. government's development finance institution, and our goal really is to finance the most critical challenges facing the world today. There were a number of differences between DFC and our predecessor agency, OPIC, Overseas Private Investment Corporation. Then I hope to touch on some of those things today and who we are. What I will say about our first year as the DFC, we've been off to a fast start. I give credit to our leadership, who has committed over $4.6 billion worth of investments since the beginning of our agency. $2.5 billion of that has been invested toward women's economic empowerment through our 2X Women's Initiative, which I personally think is amazing. We financed 79 projects and committed them in 106 countries, 2/3 of which have been in low and lower middle income countries and fragile states. $232 million has been returned to taxpayers, which is also an incredible start. To take a look a little bit at our current portfolio and where we work, as you can see, our current portfolio, which exists even from our OPIC days, is comprised of roughly $34 billion worth of commitments worldwide. We focus on all regions. Latin America and Africa, as well as Asia, are big areas of focus for us. Regarding our impact and the translating the capital committed to the impact that we've created, we've financed opportunities that have helped over 10 million microfinance borrowers, contributed to the power generation of 3.5 gigawatts. We've produced over 200,000 home mortgages, served 7 million patient visits per year, and also financed projects that had 150 billion liters, saved 150 billion liters of water annually. As it relates to DFC's focus, we really look at it through a three-pronged approach. First and foremost is our development impact. As the United States government's development finance institution, this is the key pillar which we evaluate all projects based upon. We look to mobilize private sector investment to advance development in emerging economies around the world. The second and third priorities are foreign policy, as we look to serve as a critical tool to America's foreign policy by mobilizing investments in regions of critical importance. And also, as I mentioned before, we look to create return on our investments to generate returns for the American taxpayers. As it relates to development impact, I think this is just to harp on and specifically focus on a key aspect of the DFC. Just to extrapolate a little bit further, DFC utilizes a development management system that was internally developed through our Office of Development Policy and the leaders there, and has been widely vetted and socialized with the interagency and development communities. And this is what we call the impact quotient, or IQ, which measures out the amount of development that we create within each project. IQ assesses the project contributions to a particular market based on three primary development pillars of economic growth, inclusion, and innovation. And while we don't have time to go into all of the details today, I encourage anyone interested to visit the DFC website, and what you can do is search for the impact quotient, where you can find more information. Regarding project eligibility, I think there's a couple key questions that everybody can ask themselves, which are, will my project meaningfully involve private sector? Will my project uphold high social and environmental standards? Will my project negatively impact U.S. jobs? And is the DFC open to my country of interest? And will this project fall within a prohibited sector? Those are some questions that I think, as we think about this discussion today, you can think about and as it relates to DFC financing. In regards to the financing tools, this is probably one of the major differences between the DFC and OPIC today. Prior to the creation of DFC, we had debt financing, feasibility, and political risk insurance as our primary tools. Following the creation of the DFC, equity investments, as well as TA and some other tools were given to us. And I will specifically be here to discuss equity investments and how that can work in the collaboration with EXIM to finance really unique projects. To discuss a little bit about the Office of Equity Investments, which is the team that I am a part of, and handles direct equity investments here on behalf of the DFC. We look to finance a number of different projects, primarily within the tech-enabled sectors, but also within the infrastructure and energy sectors and healthcare sectors as well. We write direct equity checks for a pro forma ownership stake of anywhere between 5 and 25%. And our investment process takes roughly 3 to 6 months, which is outlined here on the right-hand side of the screen. Regarding the sectors, which we'll touch on a little bit more today into our discussion with EXIM, we look to fight 3 primary initiatives. One is to impact climate change. Another one is to advance the digital ecosystem. And the next one is to improve global health across all regions, Sub-Saharan Africa, Asia, Latin America, as well as Eastern Europe, Middle East, and North Africa. At this time, I'll pass it back to Isabel to discuss a little bit more about what we'll be going over today as it relates to EXIM and DFC's collaboration.
Thank you. Thank you, John, for that overview of DFC and its new capabilities. Just to update the audience, since its reauthorization in 2019, EXIM has been working to ramp up its interagency collaboration and work through to this whole of government approach for the U.S. stakeholders. As part of that effort, Dan Tobin on this panel and his colleagues in the project finance team have been working together on projects and we hope bolstering our pipeline so that we can find ways to do transactions that involve our sister agencies. I'm going to turn it over to Dan so he can go over the project finance work that he is doing now, and then we can get into some questions. Dan, over to you.
Thank you, Isabel. It's great to be here today. Just to tell you a little bit about our group, I'm stationed within the Structured and Project Finance Division within EXIM, which falls within the Office of Board Authorized Finance. Our group is one of 3 groups. We have a High-Tech and Satellites Division, a Commodities and Extractions Division, and a Power and Renewable Fuels Division. My group focuses on the power and renewable fuels. We invest in new technologies that offer and established technologies in renewable energy, both wind, geothermal, hydropower, nuclear, whole series of different existing common technologies too. And our focus is to try to help exporters deploy their technologies in new projects where they otherwise would be unable to seek or be able to get financing. We offer very low interest loans for an array of different technologies, and we're typically looking for projects that are ready to proceed and have the financial wherewithal to succeed. Ultimately, from our perspective, a strong project is a project where the sponsors have the experience and ability to integrate and build out these projects. They've done projects like these in the past. They're also financially they have the wherewithal, where they have and are able to offer completion support or substantial equity, contingent equity. They thought through a lot of the transactional elements of projects like EPC contracts, O&M agreements, shareholder agreements. They've kind of worked through offtake agreements, and they've negotiated both the supply agreements for both the input and feedstock, and then also they've thought about who they're going to be selling the product to. So those are some of the elements that we look at when we evaluate these deals. We're able to offer very senior secured debt at very attractive terms. We can provide both direct loans and guarantees. For power projects, the typical debt to equity structures with creditworthy off-takers is anywhere in the 70-30, 75-25 debt equity ratio. For the very best projects, we can maybe even go up to 80-20. So we have been looking at a whole series of different projects, both in Latin America, Africa, and Eastern Europe. And we're looking at a whole series of different types of structures, which we'll plan to get into a little bit more detail as we move forward in this session. With that, let me pass it over to Isabel to talk a little bit more about where she'd like to take this session. So thanks.
Thanks so much, Dan, and thanks to John for sharing information about DFC. We know everybody today has been hearing over the course of these days during the conference all about EXIM program offerings, but it's good to know what DFC is up to and how we can work together. So why should EXIM and DFC cooperate? Why can't we just work individually? What's the value that we think we're bringing, the value proposition to our U.S. stakeholders from working together?
I'm happy to start out. Appreciate the question, Isabel. I think that the reality is that the challenges we face today are big, from combating climate change to rebuilding global infrastructure, particularly in low and middle income countries where DFC focuses, global health, and gender equity, to name a few. We need to throw everything that we can to combating these challenges, which includes utilizing all tools within the U.S. government and strategically utilizing them in concert with each other, right, to advance the priorities of the Biden-Harris administration to overcome some of these really pressing challenges. I believe EXIM and DFC working together, where it makes the most sense from a project perspective, is an opportunity to do just that, and combat these challenges in a more efficient way than we would be able to just as DFC by ourselves. Those opportunities that we are looking at to capitalize today, with this EXIM DFC partnership are wide-reaching, and I look forward to discussing more of those things today. But Dan, let me pass it over to you in case you have anything else to add.
Yeah, thanks, John. I mean, I think what we're seeing right now is incredibly intense and increased competition from our competitors in the world markets, notably the Chinese, Russians. A lot of the projects that our exporters and our other project developers are trying to compete against, they are looking at very, very fierce competition. In many cases, many of the packages that are being offered to the utilities and potential purchasers of these equipment for both power projects and renewable fuels projects, they have very, very attractive terms. It's not uncommon for many of our exporters and project developers to see packages such that, for example, the Chinese or Russians might come in with significant equity contributions, not only just senior debt, but also equity. And we're not talking small numbers, we're talking very big numbers. And so with that, it instantly makes a lot of our exporters and project developers, it puts them in a bit of a more difficult competitive situation. And so they're seeking the US government to help kind of fill in those gaps and help compete at these levels so that they can win these bids and win these projects. And we're talking big projects. We're talking projects that are both have significant geopolitical and strategic significance to the United States and to our exporters too, from a business perspective. And so it's in our best interest to try to come up with unique and new ways of doing business. And so we've begun discussions on a pretty regular basis with our counterparts over at DFC to try to understand what it is that could either match and or provide the necessary support either through equity or loans for equity or direct loans that could potentially help our US businesses compete in the world market. Isabel, back to you.
Thank you. Thank you, Daniel. We are very pleased that DFC and EXIM are working together to exchange information on our various programs and make each other aware of these capabilities, these complementary capabilities, so that we can better serve you in the audience. But don't you think that if we work together, that we could be crowding out the private sector? How will we ensure that we keep the private sector involved? And maybe this time I will turn it over to you, Daniel.
Yeah, no, I don't think we're going to be crowding out the private sector. In fact, the private sector needs and has expressed a significant need for the U.S. government to work together to help come up with solutions to help them be more competitive. And so I don't believe anything that we're doing here is going to be crowding at the private sector. It's going to be facilitating the private sector in winning these bids and winning these huge contracts for very, very impactful projects. And so having the tool to offer multiple types of products to these projects will only enhance their bid packages. And so I think that, having and coming up with creative ways will continue to help the private sector win bids. With that, I'll pass it to John for his input.
No, I think that was really well said. We specifically within equity look to crowd in the private sector. There's actually a mandate within the BUILD Act that mandates our participation only up to 30% of the equity in any given project or company. The remainder of that is generally from private sector, right? And we actually look to finance projects where we can be complementary to it or bring confidence and credibility to a project in what might be normally a challenging region. And I think that overall, we've had a lot of success doing this so far and look forward to collaborating with EXIM to continue this on. I'll pass it back to you, Isabel.
Thanks so much, John. Just to summarize what I think I'm hearing you both say is that DFC has a limit to how much equity you are able to provide, and we have a need to partner with DFC to make transactions bankable. So it seems like an obvious way forward for us to come together and bring that joint support to crowd in and reinsure investors and exporters. From the research that we've done for the competitiveness report through the years, what we've seen is that other countries have become very effective in bringing these tools together. EXIM has not explored really any of this because we've just been reauthorized in 2019, and then we were looking forward to working together with OPIC once the BUILD Act had been approved. So now we think that with these discussions, we will be able to lay the runway for these projects to take off. And what kinds of sectors and geographies are we looking at? I think that's information that our audience may want to hear more about. So before I turn it over to you, I'd also like to encourage the audience to send questions into the chat. We will be collecting those questions and then getting together to be sure to reach back out to you and respond to your questions either jointly or each specific agency, depending on the question. And I also want to make sure to tell everybody in the audience to look at the booths, because DFC and other sister agencies have booths there where they will be looking at one-on-one conversations with you to look into any specific issues that you might want to ask about. But for right now, I will turn it over to John and ask him, what geographies and sectors do you think represent the greatest opportunity for future EXIM DFC collaboration? John?
I think it's a great question, Isabel. And despite our different mandates, EXIM and DFC are oftentimes operating in the exact same emerging markets. And as such, there's a real big opportunity for us to strategically work together and intentionally do projects together. Over the last few months, under the leadership of Claire Yvette, who's DFC's senior advisor for co-financing partnerships, EXIM and DFC have been holding discussions to identify a number of key areas of cooperation. And some of those that have been identified thus far, not to limit other sectors, but some of them that we think would be a good focus for us, are renewables, clean energy, nuclear, infrastructure related type projects. And that doesn't mean that if there's another sector that we won't opportunistically look into it, but we thought that these would be a couple that might work. In terms of the characteristics of the projects, given the nature of our agencies and our ability to work together, my guess is where we would best fit in, and even just leveraging some of Dan's comments, it'd likely be larger project type deals where it would be the likeliest opportunity for us to partner together. I personally think that there's a huge amount of opportunity from a regional perspective in Africa, and I'll let Dan speak a little bit more about that in terms of what he's seeing in the financing market.
Thanks, John. Yeah, to second John's point, I mean, our group here has been seeing a lot of interest in the African region. We've historically done a lot of work in Latin America, but we also see a very strong uptick of projects in Eastern Europe, specifically in the nuclear space. So in terms of geographies, as long as we are open, we can do business. If we can figure out ways to kind of mitigate risks to work in specific geographies, we will. But from our perspective, we're seeing a significant interest in Africa. We know that there's an interagency effort through Power Africa that's kind of led by U.S. Agency for International Development, where they're looking for and very aware of potential opportunities to invest. And both DFC and EXIM have kind of both looked at the same deals, and so it's something that we're aware of. In terms of the types of projects that we're interested in investing in, as John said, there's a strong focus in climate change right now. And we believe that renewable energy, power technologies, renewable fuels are really going to be a significant focus of this administration, and then also a focus of the bank. We are looking to combat climate change. And with that, there's lots of different technologies: solar photovoltaics, wind, geothermal, hydropower, nuclear power. All of these technologies, we're looking to focus our efforts. There's also within different divisions within EXIM, focus on water and sanitation, environmental type of projects. We have a new focus also on 5G and telecommunications. And I'm aware of certain technologies that focus on the supply chain of renewables, and so that involves, in some case, extraction of certain minerals that can help deploy renewable energies and technologies into the marketplace. So I do believe that both DFC and EXIM are kind of overlapping in terms of both the geographies and the type of technologies we're investing in. And I think that that's great. We can kind of work together to kind of get those, projects out there and financed together. So with that, I'll pass it back to Isabel.
Thanks, Dan. Thanks, John. I do think that you've both identified sectors and regions that are quite challenging in terms of what we hear U.S. exporters tell us to do business. So your support and the halo effect, I think, of our combined support hopefully will encourage those projects to move forward and help de-risk some of the risks associated with investments and exports to Africa and in the climate space. So specific to the climate space, and Dan, maybe I'll start with you this time. In 2019, we know that as part of EXIM's reauthorization, EXIM was mandated by Congress to focus 5% of our authority on clean and renewable energy. And so we'd like to hear, maybe you tell the audience what we're doing in pursuit of that mandate.
Yeah, absolutely, Isabel. Great question. Yeah, I mean, in 2019, as part of our reauthorization, there, as you said, there was a significant focus for EXIM to devote 5% of its authority to support renewable energy and energy efficiency technologies. So we've been very actively looking at different technologies, specifically in the renewable energy space to include solar, but we're also looking at energy storage technologies. There are a few manufacturers here in the United States, two that are very new, ESS and EOS, not to name a few, but they are new manufacturers that are coming on board that are going to be supplying energy storage technologies to the world marketplace. And so we're very excited about that. And we view that as a positive to help deploy renewables on a much greater scale. We're very active on a day-to-day basis with project developers and utilities in the nuclear space too. And so we're looking, to figure out ways to come up with innovative financing solutions in the nuclear power arena. We also have a new program under the China and Transformational Exports Program. And under this program, we have the ability to offer specific terms and perhaps even meet and match and exceed terms that the Chinese are offering on select technologies. And renewable energy and energy efficiency, those are two considered transformational exports. So with that, it gives us greater flexibilities to offer this to our project developers as we're negotiating term sheets and coming through and coming up with solutions. And so, just to kind of finish this off, carbon reducing technologies, any technologies where we see that there could be a significant climate benefit, we're going to be focused on very heavily. We are hoping that there are new technologies that are coming onto the marketplace. Traditionally, we focused on existing technologies, but we're forward thinking and coming up with ways to kind of mitigate specific technology risks where they do exist. With that, let me pass this on to John and see if he has any input on this space.
No, I thought that was well encompassing, and I agree that we are seeing a lot of the very similar sectors as it relates to the focus here. As it relates to specifically DFC, I think that one thing to highlight here, which maybe hasn't been mentioned, but DFC recently hired a chief climate officer, Jake Levine, who, if you haven't connected with him, I suggest trying to reach out to him. He's done a significant amount of work as a real forward thinker, and has even helped me personally on a lot of the projects specifically that are looking to combat climate change. I think this will be his office, including Aparna, who's on his team, and others, will be a real tailwind to developing the policies and enhancing the programs here at the DFC, and excited to work with him moving forward. But with that, I'll pass it back to you, Isabel.
Thanks, John, and thanks, Daniel. Thank you both for sharing some details around the work that we're doing. I do want to really get the audience some information about the work that John referred to. You were referring to Claire Avett, who at DFC, together with our team here at EXIM, has been helping to lead this interagency work on a roadmap. And we are putting together concrete steps to promote this interagency cooperation and to translate the discussions into some standard operating procedures so that you both and your underwriting teams will have guidance on how to treat these various requests that we get from our exporters, Exim Bank, focused on US jobs through exports, focused on how we can increase procurement from the US, and you, John, at DFC, focused on development impacts, focused on all the good work that you're doing in those three priority sectors. And so we hope that, as you both noted, coming together in Africa, in the climate space, and in other parts, Eastern Europe, and elsewhere, that we are able to meet the challenges and respond to these project requests. So with that, I'd like to turn it back to you for any closing remarks that you have in terms of opportunities and also challenges. It has been challenging for various government agencies to work together in the past. Exim has faced many challenges these past few years that have really interfered with our ability to get together with our sister agencies. So we're very happy and hopeful now that we can work together with you and together with Claire, provide you guidance that you'll need to get these deals done, because ultimately we want a robust pipeline of opportunities to for both agencies to be able to respond to their differing, but in some parts overlapping mandates. So I'll turn it over to you, John, and then to Daniel to give us your views on what challenges, opportunities you see for us now and going forward.
Appreciate it, Isabel. I'll start out by saying I think there's a ton of opportunity to collaborate together. And we touched a lot on climate here, which I think is an initiative that we all are focused on right now. In fact, over the last couple months, we've received over 50 applications specifically for direct equity under the recently issued Distributed Renewable Energy Call for Proposals. And we're in the process of reviewing those applications right now. And I think that with those, we could look to identify projects where there's sufficient U.S. content for Exim's involvement, and potentially try and collaborate on some of those opportunities together. As it relates to the biggest opportunities, in addition to that, I do think that just finding a deal that's right for a partnership in the near term that fits our climate agenda and supports the Build Back Better initiative would be incredible. I'll pass it over to Dan. Maybe you can touch on some of the opportunities, and then we can move over to the challenges after that.
Sounds good, John. Yeah, I mean, I think if the private sector sees that there is significant participation by both Exim and DFC, it gives them greater confidence to invest. They trust that the significant in-depth due diligence that we do on these transactions to identify and mitigate the major risks, and analyze and figure out ways to mitigate those risks will help private sector get more comfortable with the transactions themselves and invest their own equity as well. I mean, there are significant opportunities out there, especially in this new world where we're transitioning to a cleaner energy paradigm. And so I think one of the areas and opportunities, again, is investment in climate-friendly technologies, energy storage, renewable energy. The administration has very, very focused climate goals. And in order to do that, there has to be a significant uptick in investments in these clean energy technologies. In terms of some of the biggest challenges we face, I can talk about that in a little bit more detail after kind of John talks about it with respect to DFC. But I think we're ensuring we need to just remain flexible, forward-leaning, and adaptable to exporters and project developer needs. think that's going to be critical in order for us to succeed in the coming years as we invest in these projects. And with that, maybe pass it over back to John just to see if he has any final thoughts on some of the challenges he's been seeing.
Yeah, happy to touch on it. I think that the challenges, and I'll even try and keep it more specific to equity. The challenges within the equity program are really twofold, which is size and speed. From a sizing perspective, the equity program is capped by the Build Act from a total financing perspective and from a equity scoring perspective, which I think, and I'm hopeful that there will be opportunities for flexibility there. And then from a speed perspective, equity is a much different tool than debt financing or project financing. Equity moves quick, and I've seen in the market a lot of our competitors move really fast. So I think those are the biggest things that we look for areas of opportunity to collaborate with Exum and even improve our processes here internally at the DFC. Pass it back to you, Dan.
Yeah, thanks, John. And I think from a project finance and senior debt perspective, where we're finding the most challenges is really finding bankable deals that offer the proper risk mitigations. We are looking for creditworthy project sponsors, off-takers, EPC contractors, O&M contractors. We need solid supply agreements. And so a lot of these pieces, they all have to come together in order to make a project successful. And it's a lot. And we do find that in order to get all of these, ducks in order to make these deals bankable, it requires a very sophisticated developer and business participants. And so we really are, looking, to kind of work with the sponsors. We'll be able and willing over time, over a period of time before an application comes in, work with you to kind of pull together an application that will be bankable. And I think that is the point that we'd like to get across, both from here at Exum and at DFC, that we will be a partner and we will work with you as a partner to help get these technologies and these projects off the ground. With that, I'd like to pass it back to Isabel and see if she has any final thoughts. Thanks.
Thank you. Thank you both. I am really excited to be on this panel with both of you and hear you share your expertise with the audience. I've been for many years hoping that this day would come where we could bring our expertise together and use that to be able to encourage more transactions. We've been discussing these standard operating procedures interagency, and I hope we can conclude those so that and to quote Claire here, she said she hopes that this effort results in a 1 + 1 = 3, where transactions that were brought individually to Exim or individually to DFC that could not be done, working together and in partnership with among the two agencies, we are able to make those opportunities a reality. So I'm very hopeful and grateful to you both. And I hope that we get questions from the audience and ideas for transactions, and we will be circling back to the audience on any of those questions. Please feel free to reach out to Daniel, John, or myself. We are happy to respond. Thank you all.